America is a land of wealth. Skyscrapers, farmland, tech giants, and sprawling cities represent trillions in value, on paper at least. But here's a question that rarely gets asked. Who actually owns it all? Not manages it, not controls it, but truly owns the land beneath the towers, the stocks behind the companies, the homes we live in, and even the debt we owe? At first glance, you might assume the answer is simple. Americans, of course. But the deeper you look, the blurrier it becomes. What if the very assets many consider theirs are increasingly slipping into foreign hands, or being consolidated by a tiny group of institutions with more power than some governments? We often focus on what America owes. The national debt is front-page news, 36 trillion and climbing. But there's another story unfolding right beneath our feet. Because while we were busy debating debt ceilings, a quiet transfer of ownership was taking place. From Main Street to Wall Street, from private citizens to corporations, from domestic owners to global players. And today, more and more of America's actual wealth, its land, its homes, its tech, its farmland, even its water, is owned by forces most of us don't see, don't vote for, and don't fully understand. This is the untold story of how America's real assets are being quietly bought up, piece by piece, and how, in the middle of a nation obsessed with what it owes, few are asking who really owns what it has. Because here's the truth. Debt gets headlines. Ownership changes the future. Welcome to Geo Capitalist, where we decode global wealth, one map at a time. Subscribe to the channel, and let's dive in. In 1980, the average American household owned more than 80% of their home's value. By 2024, that number has dropped to barely 60%. And that's not because people suddenly became irresponsible with money. It's because home prices have skyrocketed, faster than wages, faster than savings, and certainly faster than most Americans can keep up. But while individuals struggled, big money moved in. Today, corporate landlords like Blackstone, Invitation Homes, and even foreign pension funds are buying up entire neighborhoods. In some cities, they outbid families before they can even step inside the door. In Atlanta, 1 in 4 homes sold last year was bought by an institution. In Phoenix, it was 1 in 3. This isn't a trend. It's a shift, a transfer of ownership from people to portfolios, and it doesn't stop at residential property. Farmland is also quietly changing hands. Nearly 40 million acres of U.S. farmland, about the size of Florida, is now owned by foreign investors. Canada owns the most. China, though a smaller player, has increased its holdings tenfold in the past decade. What's at stake isn't just land, but control over water rights, food production, and local economies. The same is happening in commercial real estate. Iconic buildings in New York and San Francisco have been bought up by sovereign wealth funds from the Middle East and Asia. And it raises the same question again. Who really owns America's trillions in assets? You might argue that ownership doesn't matter as long as people have jobs and places to live. But it does matter. Ownership means control over prices, over access, over the future. And when the people living in a country no longer own its assets, their say in the direction of that country starts to fade. Ownership isn't just wealth, it's power. So let's talk about corporate America, the giants of tech, finance, energy, and healthcare. We think of these companies as symbols of American ingenuity. Apple, Google, Amazon, Tesla, household names born in garages and dorm rooms, now powering the global economy. But who actually owns them? The answer, again, isn't what most people think. If you own a 401k or an index fund, you technically own a small slice of these firms. But the real control lies with asset managers. Just 3 companies, BlackRock, Vanguard, and State Street collectively manage over $20 trillion in assets. That's more than the GDP of every country on Earth except the US and China. And with that money, they control massive shares of America's biggest corporations. BlackRock alone owns significant stakes in over 90% of the companies on the S&P 500. Vanguard isn't far behind. These aren't hostile takeovers or secret backroom deals. It's legal, systematic, and almost invisible to the public eye. What this means is that a handful of asset managers are the largest shareholders in companies that are supposed to compete with each other, like Coca-Cola and Pepsi or Apple and Microsoft. That gives them enormous soft power. They don't run the day-to-day, but their voting shares influence CEO decisions, board appointments, and long-term strategy. It blurs the line between ownership and governance in a way that would have shocked economists even 40 years ago. And it's not just about corporate strategy. When the same group of institutions controls stakes in the companies that set prices, lobby politicians, and control digital infrastructure, it becomes a concentration of economic and political power unlike anything seen in modern history. So once again, we have to ask, who really owns America's trillions in assets? The answer is increasingly concentrated, often unaccountable, and always evolving. But let's take this one step further. It's not just corporations or land, it's infrastructure too. Airports, toll roads, ports, data centers, even water utilities. These aren't just services, they're critical systems that power everything else, and they're increasingly being bought not by the government, but by private equity firms and international investors. In 2021, Australia's IFM Investors, a global infrastructure fund, bought a majority stake in Indiana's main toll road. In Virginia, a French company owns and operates the express lanes. In Chicago, the parking meters are leased for 75 years to a consortium backed by Middle Eastern investors. Why does this matter? Because infrastructure isn't just about physical assets. It's about access, tolls, fees, maintenance schedules, data policy. These decisions impact real people every day. And when infrastructure is owned by global investment vehicles, the priorities shift. Instead of public good, it's shareholder return. And when infrastructure fails, the public still bears the burden, while profits flow elsewhere. The same trend is happening in the digital realm. Server farms, cloud networks, and satellite internet, the pipes of the modern internet, are increasingly owned or influenced by entities with no accountability to American voters. Even strategic assets like energy grids and port terminals have drawn international attention. In some cases, the federal government has had to step in to block foreign acquisitions of certain assets deemed national security risks. But others fly under the radar. It's not a conspiracy. It's a strategy. As traditional investments like stocks and bonds become crowded, sovereign wealth funds and mega funds are looking elsewhere. Stable, tangible, and essential assets. The question we must keep asking is this: if foreign investors and mega funds own the pipes, the ports, the power lines, and the platforms, do we still own the country they run through? Now let's talk about debt again, but from a different angle. Because while we often ask, who does America owe money to, we rarely ask, who profits from that debt? The U.S. Treasury market is the largest and most liquid debt market in the world. It funds everything from wars to highways to research grants. But while Americans do own a significant chunk of it, through pensions, mutual funds, and bank deposits, more than $7 trillion is held by foreign entities. That includes central banks, sovereign wealth funds, and private investors across Asia, Europe, and the Middle East. When the U.S. borrows, these institutions lend, and they collect the interest. year after year. But debt isn't just about treasuries. It's also about corporate bonds. Major American companies issue debt to fund expansion, pay dividends, or simply manage cash flow. And here, too, foreign ownership plays a massive role. Nearly 30% of corporate bonds are held by overseas investors. This means that every time a U.S. company borrows, a slice of its future earnings flows abroad. It's not inherently sinister. Global capital markets function this way. But the consequences are real. In times of crisis, those foreign holders can pull money out, drive up borrowing costs, and trigger sell-offs. We saw it in 2008. We saw it again in 2020. Debt, in theory, is just a tool, but in reality it creates influence. Those who hold your debt can shape your future, whether that's a bank tightening terms or a foreign government using its holdings as leverage in trade talks. And that brings us full circle. Even the financial instruments America uses to grow, rebuild, or recover are increasingly owned, in part, by outsiders. So when we tally up the real value of what America has, we also need to ask, how much of it is already spoken for? In the digital age, intellectual property has become one of America's most valuable exports and one of its most contested battlegrounds. Patents, software code, film rights, pharmaceutical formulas, and tech innovations form a significant portion of what the U.S. economy produces and protects. But what happens when those assets, too, are quietly shifting ownership? Take technology. The algorithms behind your favorite apps, the software behind medical breakthroughs, and the designs behind the latest smartphones often originate in American labs. But through mergers, licensing deals, and offshore structuring, the actual control over these innovations increasingly ends up outside U.S. borders. In 2023 alone, over $500 billion worth of intellectual property transactions were tied to multinational corporate restructuring, much of it routed through countries with favorable tax laws or looser disclosure requirements. Pharmaceutical companies commonly move their patents to Ireland, media companies establish shell subsidiaries in the Netherlands, and tech firms routinely license their own software to offshore affiliates, paying themselves royalties while shifting taxable income out of the U.S. This strategy, while legal, fragments ownership. The intellectual property may have been developed in Boston, funded by American taxpayers, and protected by U.S. courts, but its cash flows enrich entities registered in Luxembourg. This becomes more alarming when state-linked foreign companies buy stakes in firms controlling critical IP. It's not just about TikTok or semiconductors, it's about who has the long-term rights to the code that powers artificial intelligence, the blueprints for next-generation defense systems, or the gene editing tools shaping the future of medicine. Ownership here isn't visible in storefronts or ports. It's buried in contracts, licenses, and legal language that few understand. As we ask, who really owns America's trillions in assets? We must include not just land and buildings, but the invisible ideas that drive economic growth. Because in a world ruled by code and content, whoever owns the IP doesn't just make money, they make the rules. Once upon a time, ownership was a symbol of independence. A house with a yard, a car in the driveway, a business with your name on the sign. It wasn't just what Americans had, it was who they were. But in the past 2 decades, something fundamental has changed. We've traded ownership for access, and while this shift may feel modern and convenient, it comes with deeper consequences, especially when we ask who really owns America's trillions in assets. Streaming replaced record collections. Ride shares replaced car ownership. Renting became more common than buying, especially among young people, and companies caught on. Today, some of the world's most profitable firms like Uber, Airbnb, and Netflix don't own the cars, the homes, or the theaters they depend on. They simply control the platform. They monetize access, not the asset. And while users enjoy flexibility, the companies and investors who own the platforms quietly accumulate wealth. This mindset has seeped into our personal lives too. We no longer expect to own things forever. Subscription models dominate everything from software to razors. Rent-to-own schemes flourish. Leasing is the norm. And with it comes a quiet erosion of stability. Because while access may be flexible, it's also fragile. When you rent, you can be priced out. When you lease, you can be let go. When you borrow, you can be denied. Meanwhile, those with capital, real capital, are using this shift to consolidate power. They buy the homes you rent. They own the servers behind the cloud. They finance the fleets behind the gig economy. Ownership still exists, but it's increasingly concentrated. The cultural shift from ownership to access has made life feel more convenient, but it's also widened the gap between those who consume wealth and those who accumulate it. And in a nation where the dream was once to own a piece of the pie, we now find ourselves paying monthly just to rent a slice. There's one more layer to this puzzle, one that most data doesn't capture. It's the layer of shadow ownership. In cities like New York, Miami, and Los Angeles, thousands of high-end properties are owned by shell companies. These aren't always criminals or oligarchs, though some are. Many are just anonymous holding companies registered in Delaware, Panama, the British Virgin Islands, or Luxembourg. What they offer is secrecy, because in America, unlike in many other developed nations, you can own valuable assets without disclosing who you are. No photo, no passport, no fingerprints, just a name on a registry that leads to a law firm or a mailbox. It's estimated that over $2.3 trillion in U.S. assets are now held by entities whose true owners are undisclosed. That includes homes, land, commercial buildings, art, vehicles, yachts, and even private equity stakes. And while many of these may be perfectly legal, the consequence is still the same. We don't know who owns the foundations of our economy. That means we don't know where the wealth flows when properties appreciate, when rents go up, or when local taxes are raised. And we don't know who's lobbying for what behind closed doors. The owner could be a pension fund. It could also be a politically exposed person with deep interests in another country's foreign policy. The issue here isn't just legality, it's traceability. Ownership used to mean accountability. If you ran a factory, lived in a home, or leased farmland, people knew who you were. But now, when a property gets flipped 3 times in 12 months through LLCs and blind trusts, that chain of responsibility disappears. It's not just hard to tax, it's hard to govern. In a democracy, that's a dangerous thing, because when ownership goes invisible, so does influence. And in many ways, America's greatest vulnerability may not be what it owes, but what and whom it can no longer see. So, is there a way back? Can the U.S. reverse this quiet transfer of ownership and bring the future of its assets back under domestic influence? History suggests that, yes, it can, but not without intention. During the Great Depression, the government incentivized local land purchases and broke up monopolies. After World War II, the GI Bill empowered millions of veterans to buy homes and start businesses, shifting the ownership base from elites to everyday citizens. Even the Homestead Act of the 1800s was built on the principle that ownership breeds responsibility, growth, and stability. Today, we're seeing small but growing movements echo that spirit. Some cities are fighting back against anonymous LLC ownership with transparency laws. Others are offering incentives for first-time homebuyers, local farmland cooperatives, and minority-owned business funds. Tech startups are building platforms for local investing in infrastructure and real estate. It's not enough yet, but it's a start. What it signals is that there is a desire to return to ownership as a civic value, not just a financial one. But reclaiming ownership requires more than just laws and incentives. It requires a cultural reset, one that teaches the next generation that wealth isn't just what you earn, it's what you build and protect. That owning a home isn't just about a roof, but about a voice in your neighborhood. That investing isn't just about stock tips, but about stewarding the economy you want to live in. Because if we don't teach this, someone else will. And they may not be teaching it in English or from within America's borders. The truth is, the door hasn't closed yet, but it's narrowing. The question is, will we walk back through it before someone else locks it from the other side? After everything we've explored, from real estate and infrastructure to patents and platforms, the question still lingers. Does America actually own what it thinks it owns? Or have we unknowingly traded national assets for the illusion of control? What's become clear is that ownership hasn't disappeared, it's simply shifted. It now hides behind shell corporations, inside global tax structures, in leasing contracts, or within licensing agreements. While Americans see the homes, the highways, the logos, they often don't see who's collecting the rent, charging the toll, or cashing the dividend. This is not about fear. It's about awareness, because a nation that doesn't know who owns its assets can't control its destiny. If power follows ownership, then influence follows transparency. And without it, we risk becoming tenants in a country we think we still own. So what now? It starts with rethinking what we mean by national wealth. It's not just GDP or stock prices. It's who benefits from the systems we maintain, the resources we produce, and the labor we provide. Ownership isn't just economic, it's strategic. It's what determines sovereignty in a global era. And as we close, one final thought. The question, who really owns America's trillions in assets, isn't just a financial inquiry, it's a national reckoning. Because if we don't ask that question now, someone else will answer it for us. If you found this breakdown eye-opening, I recommend you watch my next video, which complements this one perfectly. Subscribe to Geo Capitalist, where we decode global wealth, one power shift at a time. Thanks for watching, and we'll see you in the next video.